Good afternoon, sir. How are you?
I'm doing well. I got about an hour to burn. My wife
Beautiful.
is going to come back and we're
I
going to
I
go do
I
some.
love what you were saying, and I can tell you. And I was trying to be upfront on Front Street. I was mitigating a loss today. Like I was in drawdown, and I traded myself out of drawdown in a very nice, clear way. I demonstrated it, but what I didn't show was the L I took. And I think the question or the conversation of people and the difficulty of the markets, are they getting waxed? I mean, you clearly understand what's happening, but I wanted to make it very clear. I was trading out of drawdown today, utilizing sheer skill set that was able to allow me to mitigate losing or having a red day.
Well, I mean, I made some mistakes. I did a recording before I started this here. It's rendering, but I'm going to let it cook a little bit longer because I want to try to see if the translations can be done. Say by I don't know what's the time here, 2 o'clock. Say by 3:30, I want to see if it'll populate the closed captions in foreign languages. I don't know how long it takes to do that, so I'm trying to use this as a benchmark to determine how long I have to make the video, and then give it time to make the translates. I get inundated with emails and complaints to me all the time about we don't understand your language, but it's YouTube's issue, not mine. It's not an immediate thing, but I made a mistake today, and you'll hear me talk about it in the review. While I was talking to my sons, I was holding a short, and I was like, I'm going to take one of them off here. And I thought I changed the three in the contract volume that I'm going to be executing under. I thought I changed it to one, but it didn't change. It was still at three. So when I tried to close one as a partial, I ended up closing three. And between that and my youngest son, like nudging my arm, like to say, like, Dad, what did you just do? Because he heard me say I want to take one off, and he watched three come off, and it completely took me out of my focus. And I was like, okay, well, we'll just keep it as it is. I wanted to do something else with it. I'm gonna try to see if I can have one left on to get back to full gap closure. Could it have failed to get down there? Sure, but at least that was what I was gonna try to do. So I messed up today too. I mean, it was a whole lot of excitement in the volatility. I got real close to the high, and I'm happy about that. So
See, you crushed the short, and that first BISI that formed, it was one that I measured, and I was actually creating, some framework and really looking at previous conversations that you've had with the community within the Trader Roundup kind of format here, and that one-on-one style that you offer the student that is unique to here for the folks that want to are listening. We have this archive, and it is on the website. It's 100% free for you. We're putting a little more of a forum together, like the OG days, so that there can be a little bit more communication. But I want folks to know that's a very good, valuable place to learn and just go back and listen to these archives. So I've been mentioning, Michael, obviously core content. That seems to be a missing piece for so many students that I talk to that suddenly hear about you. They go back to the 2022 mentorship clearly or one of these years thereafter, but I feel like the entire community is like off in that there are a lot of new folks that just don't pay attention to core content. And if they were to do that, things like loss mitigation, you talk about it clearly in different chapters in month 2 specifically with risk management, right? And then obviously the breadth of a candle and how to read month 4 and the importance of order block and order block theory as you lay out each individual chapter within that entire month of information. So anyway, we're talking loss mitigation, loss management, and you said you talked about it within the rendering. Would you like me to bring some folks up or
sure, yeah. I mean, however you want to spend the hour. If you just want to chit chat, if you want to have people come up and ask questions,
I
that's
mean,
fine.
I love talking about the price action real quick with you one on one, brother. If you want to know the truth and bring up some folks, we got Pit Munch here as well. I'd love to include her, and we will bring some more folks in. But I mean, I was with the volatility I had longed, and it came down and short and took me out, and I was in drawdown instantly. And for the rest of the session, I was looking for that pivot and those original draws that I had on the bullish side to try and come back and kind of revert them back in the range. I was taking into account things that you had previously talked about in the last trader roundup of these 2 hour kind of cycles, and looking at like, okay, well, we're super bearish and we're going to be super bearish probably for this wave of structure that's coming in. And if I were to do anything, I have to wait. And so that's precisely what I did. And waiting for more of a London close and a PM move from that strong volatility to the downside, I was just looking for bullish retracements back after that strong bearish price leg down. And we ended up getting it, and I felt like it was a high probability, but I was mitigating a loss the entire time. And I believe there's a skill set as traders and willing to come to the market in drawdown, knowing that you're there to mitigate a loss. You're trying to, I mean, it was such an interesting thoughts going through my mind today, Michael, in that, like, being a trader trading an edge versus someone who is gambling. And I refer to the form gambling because if you're going in after you've done a loss, you have to have a level of confidence and surety in how you're moving within the market, and that's shown through your executions, right? And the way we do a base one within our community, you're going to see how someone's moving and how they're, again, if they're mitigating a loss or how they're latticing up the market or down the market with logic. And that means sometimes more than one entry. That means, again, there's a lot to mitigating a loss, Michael, that I believe within the skill sets of trading is very worthy of a discussion. And you mentioned it. And that's kind of just what I would love to hear more of your thoughts, getting your brain of mitigating a loss. Like, okay, you came in, whoop, something happened. You were wrong. Now what? Now you're behind the gun, but you're still trusting in all of your analysis for what hasn't happened yet, but will happen with time, potentially.
Well, as it relates to dealing with losses or mitigating them, traversing to the other side of them, it's very difficult for someone that's trying to do this and avoid all losses, because it's not going to be possible. Okay, and the faster you warm up to the idea that you're going to do things incorrectly, and that's okay, it's human, you're going to discover how to do it correctly when you make mistakes. And no one really forces that truth on people in the beginning, because no one will buy their courses, no one will buy their memberships, their workshops, their whatever they're selling, because it reminds them that, hey, there is really a potential to lose here. And even if we are subconsciously thinking that's for someone else to experience, it's not going to happen to me, it's going to rise up in us and it's going to make us feel like we're going to be the exception. We want to think that we're the exception to the rule, and no one is. No one's the exception. We're all going to encounter it. And the way I teach and try to get my students to understand that the sooner you get into the mindset that sometimes you as the operator, you as the primary source of responsibility for every transaction, every inability to participate. In other words, when you should have pushed the trade, when you should have exited the trade, when you should have added more, took partials more, or reduced the open position because things looked a little iffy. It was less probability in your favor for the trade that was originally outlined in your model and what you see in price action, your analysis. It doesn't look as strong. And you're getting that nagging feeling in your gut that you feel like maybe I should get out of it, but you don't have the full conviction to close it out. Well, then you should take off half the position or the majority of the position. And as long as the price doesn't rip away, you can use another PD array to put all that position right back on. Without knowing what it is you're trying to do and having a model, you're going to be reactionary to everything. And the worst two things that you can be reactionary to is the psychological impact of your indecision or your decisions that you made as it relates to the trades, and the emotional stimuli that comes with it. So you have emotional and psychological. And everybody's excited when we come in. When we slept, we wake up, we're getting ready to go into a new session. We're optimistic. We're like, I can't wait to get in here and catch a nice swing. I'm going to catch a nice run. I want to get my target. I'm going to make my $100 or whatever it is you're trying to aim for. And then as soon as you push the button, now you're wrestling demons. You're wrestling with the idea of, well, I let go of the steering wheel and the gas pedal's floored. So where are we going with this? And you've lost all control. You have to submit to yourself to what the market's going to do. So the only thing you can do is know your model, know how to read price action, and continuously give that feedback loop an opportunity to console you, not scare you. And that's why I was saying last night in the lecture, and I've said it ad nauseum. When you have folks that will say, you only need one trick pony PD array, you only need one of them. Get all this off your chart. When you do that, you're literally stripping yourself the opportunity of peace of mind. You don't need every PD array to enter on, but you do become better at reading when you know what they are. And you don't have to necessarily know when they're forming, but once they're in price action, you can refer back to it and say, oh yeah, that's that wick, and it went down there and it only went down to half of that, and it's been bullish since then. That's actually a positive. So you encourage yourself with that. You're giving yourself continuous positive self-talk. That must happen in every trade that you're in. If you're not doing that, you're sitting with idle hands, and idle hands worry. Idle hands stress. Idle hands get overconfident. They add to positions that are already too long in the tooth. That means they've been going for too long, and greed starts tapping you in the shoulders. So by giving a positive self-talk and reminding yourself every individual candlestick has some part of the plot. They're actors in the storyline that's unfolding in price action, and you have to let them say what they are supposed to say. It's part of the script. Even if it's moved past it 2 or 3, 6 candles, 10 candles, go back and say, okay, I'm feeling a little anxious. Let's go back through the chain of custody. Where did price start this run? And is every candlestick supporting the idea that I supposedly expect in the technicals, but it's not realized yet? So I have to keep a loose grip on it. The only thing you hold firm and hard with is impeccable risk management. You have to be diligent. You have to be forceful in that regard. But when your trades are panning out, you have to be very velvet glove, soft. Don't try to grip it and hold it with the death grip. Allow every individual candlestick to give you feedback to tell you whether or not everything is it's copacetic or it's not. But when things start to unravel and you start seeing warning signs that maybe this isn't what I thought I was going to do, it's not weakness when you're first learning to do these things for you to bail on it entirely. Because what you have now is you have a finite end to the pain or the negative impact. And now you have a complete, here's the beginning point when you got into the trade idea. And now you removed it because you're no longer seeing the things that supports or should support the idea. And when you're new, you got to protect your mindset. You got to protect it. Because if you start taking in bad habits, saying, well, ICT says, I should be holding for 2-hour trades. Otherwise, you're a weakling. And I'm not saying that. In the beginning, it's going to be very hard for you just to get in the trade, let alone stay in it for 30 seconds to 5 minutes. You graduate slowly in a progression, and you constantly give yourself a little bit more exposure to things that you've not done ever or have very little experience in. And taking losses is something that you should not fear. You're not going to know what to do and how to read price action until you fail trying doing it. Say it out loud right now. You don't need to say it in the microphone to me, kid. But everybody listening, say it out loud in your own voice. It is productive for me to experience losses in the early stages of my development. Otherwise, how will I recognize when I'm doing it incorrectly? By having something as a benchmark as easy as failing, failure is not, you're never going to be able to do it. But look at the weight of that statement when you first start. I tried to take this concept and I tried to use it and I tried to get in there and it didn't work. And then what do you feel like? You feel like your spouse has been cheating on you and you walked in on it. You're gutted. Why? Because you're bringing ignorance. You don't know anything about yourself as a trader. You have no rule-based ideas being applied. You don't even know what the model you're trying to trade with. You don't know how to read the PD arrays. You can say, oh, I can see that when he talks about it or when someone else is saying it, but you can't see it when it's forming or before it forms. So is it fair for you to beat yourself up in regards to experiencing a loss or having to work through mitigation? Or what happens if you try to do mitigations in a loss or a series of losing trades and you make the loss even bigger? That's really going to make you feel like you're, in a world of crap. You're going to be real easy to talk yourself out of trading. Or the pain and the discomfort of that is going to make you feel like you're in a house of fire. And what are you going to do in there? You're going to run. You're going to try to get out of there as fast as you can. And the only way you can escape a house on fire that's burning in equity and drawdown, the natural tendency and the mindset shifts to trade more. And in reality, what you're doing is you're throwing more gas that you use to cause that fire and drawdown. You're just tossing more gas on it. You're not giving yourself a chance to say, okay, I'm just going to find the safe exit and prevent myself from being consumed entirely. And then when the ashes settle, then I'll come back and I'll rebuild from there. And that is a very hard thing to do. When you're brand new, you think somebody like me or someone better than me or someone that claims to be better than whoever is the best, they're going to sell you something. Okay? They're going to sell you something with the idea that if you join my thing, if you pay for my thing, if you buy my thing, if you do what I tell you to do and worship me online, these things are going to make it easier for you to trade and you're going to have no problems. And it's going to be an everyday trading success story. And that is absolute bull crap. But it sells. It sells tickets. It sells memberships. It sells the idea of participation. And it builds team mentality. But is it building your bottom line and making your equity go up? Do you feel confident as a trader but not overconfident? Are you able to see the things in the price action that you should be seeing that continuously supports the ideas that you're trying to implement? If you're seeing them fail, it doesn't mean that the concepts are failing. It's just highlighting an area at which you're doing it incorrectly. And that takes personal responsibility and maturity. And 99% of these people that like to troll us or me specifically, they're literally indicating that they have zero responsibility and they have zero self-control. And they're trying to get a stimuli of feeling like they're victimizing someone else because they're living in victimhood. They're putting themselves through it. And if you're not careful, you'll go into this industry looking for a way to fix that same issue. And you think, if I start making money, if I start doing things correctly and other people see that I can do it, they will say positive things about me and that'll lift me up. That's the worst thing you can do. Because now you set yourself up to never have losses, to believe that losses are never possible or shouldn't happen, or it's weakness. And you're placing the control, the power of other people's words about you to provide the only means of supporting or building you up. That's your strength. That's your source of encouragement. Other people. That's why I facetiously say, can you encourage me today? I mean, the market's putting something on me. I'm being facetious because there's other people out there that think that we didn't know what's going on. And yeah, I hear what you said. You did something, that you could have done differently, but that's not the end of the world. That's just one transaction. That's a series of transactions today. I didn't hear you say, F this crap. I'm done with this stuff. This one day made it clear to me that trading is something that is impossible and I have no business messing around with this stuff because no one can do it. I didn't hear that. I heard I got myself in something and I worked towards trying to get out of it. And you got yourself there. You didn't glad hand say, I'm so good at doing it. You recognized that it was a little bit of hardship there. And that's good. That's maturity. That's you observing and identifying that these are things that all of us are going to have to encounter. You're going to do something wrong. You're going to miss the trade. You're not going to have enough on, or you'll put too much on. And because that weight of that position size is going to have a whole lot more influence on what you think you can hold on to. And even if you know how to read price action, every little fluctuation against that position is going to make you second guess. What if this is the day the ICT stuff really fails? That question probably never jumped in your mind because you've been consistently making money. But now because you have the biggest position on you've ever had, these intrusive thoughts, these things that are most likely never going to happen, you start entertaining that. And the way you keep that from happening is you don't over leverage, you stick to a rule, you do impeccable risk management, and you constantly give yourself positive self-talk. If you build yourself up to be a online participant where other people can tell you the good or bad about yourself, and you're listening to that, and you latch on to people giving you positive criticism, you're doing it incorrectly, because what you're saying is your own words and your own observations about the efforts and the work that you're putting in this craft, and the observations that you're recording and logging, saying, I put this much time in today. This is what I studied on. And here's the thing you need to be doing. By positive self-talk, it's while you're watching price action. And then when you're not watching price action, and you encourage yourself, you know what? This is what I did today that was strong. I didn't take stupid risk. I didn't over leverage anything. You know what I did that I learned it was exciting today? I learned that this specific PD array literally supported the idea, and I don't even use it. And now I have one more step further in my understanding on how to read price action, and these PD arrays are going to support it. You're learning the custody from one PD array to the next. There's a chain of custody where price uses one specific PD array, one candlestick at a time, and it's continuously giving you feedback whether or not the idea you're expecting to draw on, where the price is going to go to, it's constantly giving you information. But if you're not looking at that, if you're not physically saying it out loud, talking to yourself, not internally, you need to hear yourself say it. Because thinking about it, your mind can jump to something else. But when you're talking about it, you're doing two things. You're thinking about it, then you're articulating it, and your brain sends it to your mouth and then your vocal cords, and you're speaking it. That's too many things going on for you to share your mind with something else while you're visually looking at the candlestick. So you're talking about it like you're teaching someone sitting next to you. This candlestick right here is behaving this way, and it's exactly what I want to see because this supports the underlying narrative that price is going to go to where I think it's going to go. And I have not seen anything yet that changes that underlying narrative. You got no chance to think about anything negative. You're constantly keeping your focus on the task. But if you're listening to music and you're online and you're live streaming, or you're talking about this person that's doing way better than you or not doing as well as you think they should do, you're not minding your own business. And it should be no surprise why you're failing or finding hardship. So when you're doing your streams, kid, I think that you should talk less about other things. And I came in one time and I heard you say, and permit me to say, because I'm saying it in love.
Okay. Yeah.
When you're saying, like, you know, I did this, and you're being real hard on yourself. And as soon as I showed up, I'm like, wow, don't do that.
Well, that was actually a day I took a loss on a live stream where I hadn't had as many losses on the live stream. So I was definitely critical of myself. And to your point, you're saying something else, like clapping, kind of singing, um when I'm engaged within the market, like that inspiration, like I don't know if it's okay, but there's like a level of therapy in what you're saying as far as like self-talk, and I try and do that. But I also realize where and how, I mean, if I have or I'm conveying negative self-speech on a live stream, as I did when you came in, I also fully accept total accountability for doing that wholeheartedly. I can
I
do
just
better.
personally think, yeah, I think you can definitely do better. And if you look, if you want to celebrate because something panned out perfectly, once the trade's closed, guess what? It's over. The store is closed. You want to turn the lights down, invite the friends to have a free sample, and we're all going to hang out and drink at the bar. Great, wonderful. Okay, but you can't do that. Okay, it's not happy hour while we're in the trade. It's not happy hour when the markets are still trading. You have to close down shop, then be congratulatory or refer back to what you did and didn't do as good as you should have. And when you're going to stay on the stream and you're going to talk about what the market's going to do, you got to remember your audience. You remember when we had our meeting?
Yes,
You
sir.
got to remember your audience. Okay, the power in your words, they're going to latch on to whatever you say. And if you say something that's negative or it's self-defeating or it leads to those types of things, you're actually bringing your audience down, and that vibration is going to show up in a way where they're going to be less inclined to come back and listen to you. They need to feel like you're bringing them more strength, more focus, reminding them that, you know
Absolutely.
what, I was doing something over here. I never even thought about it. And then Kit said this the other day, and it resonated with me. You know what? That's real. That's why I tapped into Trader Roundup. That's why I tapped into your spaces, because I listened to them privately for a little while. You didn't know I was listening, but I'm listening to them. And a few of them were just, I mean, I was weeping because I'm listening to these people pour their hearts out, and I'm like, man, this is exactly what this industry needs. It's like AA, or
Yeah, it's keeping it real,
yeah,
honestly.
it's not the sugar coated join my stuff and you're going to make a lot of money and there's no hardships here. This is what it's like sometimes, and that's why we call it Fight Club. You're wrestling through things. Unless you go through it or you're putting yourself through it, you're not going to fully understand it. And then when you hear other people say, this is what I'm struggling with right now, and other people are coming forward and say, you know what, I'm going through that same thing too, or I went through that and this is how I overcame it. That's encouragement. That it's a reminder that you're not the exception that you thought you were going to be. And the same way, you're not the only one that's going through the bad stuff. Other people go through it too. Everybody that's made money, everybody that's consistently profitable had valleys. And those valleys were a whole lot longer, and they spent way too much time in it than they wanted to. But everything that made them strong and consistently profitable, they learned in the valley. You don't learn it on the mountaintops. That's where you get to shout the victory. In the valleys, that's where all the dark shadows, the things that you're afraid to step into darkness, you don't know what's going to hit you, you don't know what you're going to trip on. Once you walk through it a few times, then you can tell the people behind you, hey, I've been here before. Watch out for that. Watch out for this. I've been here before. And then you get to the mountaintops where the visibility is beautiful. The air is cleaner and crisper. There's no shadows on the top of the mountain. Everything's visible. Everybody can see that. Everybody can see your successes. But why is it nobody wants to talk about the valley? Nobody wants to talk about it. Like, nobody had that problem. You hear these people come, you see all these people that come out and they say they had a horror story, and as soon as they say that didn't happen to me, bullshit. That is the biggest bunch of bullshit. There has never fucking been somebody walked out here and fucking tap danced into the marketplace and never had hardship. When I hear that shit, and there's a motherfucking clown on the internet right now that says that that's exactly how he did it. Get out of my fucking face, you fucking liar. That's the kind of shit you got to steer away from. You got to move away from that stuff. Understand that you're going into war. You're warring with yourself at first. That's the boot camp. That's boot camp. And nobody wants to go to boot camp. But that's how you discover the trader, the warrior, the participant with your weapons. You get to learn how to use your weapons. And then you take those weapons into the arena, which is the market. And there's motherfuckers out there that know how to take your head straight, clean off at the shoulder in a second. And the first few times you step out there, you're going to get mugged. You're going to get stomped, curb stomped. And you got to realize when that happens, when you have a little bit of experience, you can't look at that and say, this is not for me, I can't do it. If you're going to be a trader, you got to realize you're going to take some shots. You're going to lose some money. You're going to pay your dues. You're going to do those things. And the traders that talk themselves through that, and they have a support structure around them, like what you have built with your community, that is helpful, but it needs to be cultivated. And the guy that's leading that, he has to be accountable to not only his audience, but himself, because the audience is paying attention to what you say and how you react and respond. And if they see you go through something strong that's in opposition and you manage it in the way we're discussing it here, that builds them up. They won't make poor decisions. And when they give you feedback and they say, you know what, you were such an encouragement to me because I was going through this and I didn't want to tell anybody I was embarrassed. I didn't want to say it because I was ashamed. I was afraid people were going to troll me online. And when you said that, I felt encouraged to be able to say, you know what, I'm going through that same thing. And I'm glad that I got to watch you talk about how you're going through it. And you didn't do all the things that I'm secretly doing. And I'm not seeing any way out of it. I'm keep doing the things over and over again, repeating the bad things, creating a habit that's toxic. And when they see you do these things, it builds your audience. The resonation that you get between the host and the audience listening to you that you're influencing, it builds a tighter bond. And they give you feedback, and that encourages you. That's a reward for you doing the right thing because you're being held accountable by your audience.
Should I bring more of the audience into the live stream?
Sure.
I can do that.
Did you receive that with love, though?
Yes, absolutely. Yes, sir.
Okay.
I absolutely. I mean, I love what I do. I know I'm meant to do it, and I mean, I want to do it better, and that's very good feedback, and I definitely take it to heart.
Awesome.
So love that. Actually, it's great. I mean, today is a great example of taking an L and then being able. I mean, I like being able to show on the base one. You can really see where and how the breadth of a candle forms, the low time frame, and your executions of what you're looking to do. Like I made it very clear on the execution chart that I posted today that I mean I was working my way mitigating a loss. So it looks real nice and poetic, but it really wasn't. And I mean, I will also tweet and talk about trading on a device. I think there's something to that in the generation and the folks that we live in. I've executed a lot on an iPad Pro. I utilize an iPad to execute, and then I also enjoy executing on a phone. And I think there's a lot of folks that really intuitively like touching a screen when they execute, which is different than the traditional stationary person. And what I'm confident and comfortable in saying, I actually see the 1 minute candle better on my phone screen. Like I can see the breadth of a candle. Like I can zoom in and like really see what I'm looking for on a 1 minute, on a sub 1 minute, which is like the textbook what you teach us. So there's almost like a level of comfort there. And I just like communicating this because I know I'm not the only one within your audience of folks that really thrive in utilizing your concepts on a mobile device. And that's not the traditional like whatever hedge fund person that's typically engaging with the market. So I just think there's power in that and being able to exemplify that. And I know a lot of traders as well that execute your concepts on a phone, and it's not on a multi-screen, multi-device, multi-screen apparatus. It's typically in a very limited space, and they're able to make some pretty good decisions. So I just like bringing that up, Michael, to you as well. So I don't know what your thoughts are on that, if you have any, but
I'm I'm aware that some people, like I have students that are somehow able to have cell phones in prison, and they listen to my stuff in their cell with a cell phone that they're not supposed to have it, and they have actually reached out to me, and they're like, "Dude, I'm watching and I'm studying your stuff, and I'm about to get out in like 6 months or a year. I got left another 12 more months, and I'm out. When I get out, I can't wait to start doing this stuff." When I hear people say that they're trading on their phone, that's the first thing that jumps in my mind. Um,
I mean, I
but
love that though. I just think like like there's two things in the world that we live in today that you have created when you came to Spaces and you came to X that I was able to carry that you brought, and that's this radio format, this voice in Spaces that you've created. You created that in 2022. You brought that to X. You brought that. That was all you. And you look at the time frame and everything and how you waned from doing it simply by yourself to where we kind of were a reverberation of that, just the community coming together based on the vibration that you resonated in all of those very impactful spaces. My point being, and we've heard and you've heard traders that haven't been as tied to the YouTube channel at first. They've listened to these radio style, podcast style, mentorship quality conversations, and they've really resonated with the values and the messaging that we've been able to convey. And I say we because this is something I've done consistently in trying to follow your assignment and what you brought to Spaces. So again, like this for folks who are new, like this is a reverberation from 2022 that came from Michael with Spaces, and this is a continuation of that, and the coalescence of folks that have been learning core content in 22 and 23 and 24 and 25 and 26 and 26. This has been a very much a concert and a dance together in which there's a lot of information for the student to find, and Trader Roundup is now this format in which if you're a busy professional maybe you don't have a lot of time in front of a screen, but you can be studying this stuff from your mobile device. You can be listening to this stuff on your phone. You could go to a website. You can listen to these conversations with Michael one on one, where he answers questions. Today, he's answering my questions, guys. It's really cool. Like getting these conversations are very valuable and topical with what we deal with in the market. The market's not easy. Volatility is crazy. I got waxed trying to go long off the fucking open, and it was not pretty because it was fast, and I was not
Hmm.
on the right side, and it had to work my way out of a drawdown, and how to do that, and to patiently wait, and to find where and how to engage in the market, and try and have faith and trust in what order blocks are, and what the breadth of a candle is, and what OHLC is, and what these concepts are, and how they work modelistically, and where and how you can apply the schematic with your own logic, and then kind of tap into your intuition. The better of a trader that you get, and I believe, Michael, you really, folks don't realize that, like, part of being a good trader is tapping into your own intuition. And the more you can feed your ego, or you can feed your intuition, and they're not typically one and the same. They're kind of polar opposites. And I think you've done a great job, Michael, in communicating with your community where and how to try to tap into your own intuition, and the self-talk that you're talking about today, and that you've talked about within the classes of late. I think that's so important for a trader to really tap into, you know?
It's required. Like it's not something that I don't think sustainability and continuously profitable traders can get there and stay there without it.
I agree. I mean, I think inspirational music. I think there's a level, like, I use Om, I hum, I pray. When you're in a position and you have conviction, and you believe in the trade, you put the stop loss where it needs to go, and you just let it do its thing, and you try to detach from what emotions kind of percolate. And I believe all of us have that. Like, all of us do. There's no time ever when that's not present. And some people think that you somehow arrive magically at profitability land, and that once you're in profitability land, the skies are blue forever and you never have these issues.
Consistently profitable is a mile marker. It's not a destination. You're constantly moving forward. And sometimes you're going to be forced off that pathway you think is the only way there is to continue staying that way. And you have to take a detour. And sometimes it's going in a U turn, going back to go forward again. And that's you just simply navigating the uncertainty of what's ahead. Drawdown, losses, going on tilt. You know, if you have a model and you have an approach to following that model, and you understand how to read price action, and unfortunately you let greed or fear or just the wild markets in one day completely overcome you, and you just go on tilt and you blow out. If you don't have a model, it's next to impossible for you to want to come back ever again. You'll want to do it, but that hurt and that fear of losing more will prevent you from ever really doing it. The people that have a small little understanding about what they should have done, they're the ones that go back and do it again. The people that learn their lesson trying to over leverage, trying to overtrade because they think they have it and they're going to make these big payouts real quick. They have a model, but they just do things stupid with it. When they blow and tilt out, it's easy for them to re up and restart again because they know what they did was silly, but they're just trying to find out if they can just get that lottery win on something that's consistently profitable if they just stay in its parameters. They don't have any reservations about it. They won't even beat themselves up about being on tilt. And I think that's really what these highest paid out traders are. They blow counts all the time. They blow them all the time. They do a stellar fashion of blowing out lots of accounts. They don't mind it so much, and they don't care what the people's public opinion of it is because they know what they're doing with their own skill sets. They're just trying to push it beyond the scope of what they should do and hoping that opportunity and their willingness to participate with over leveraging meets together and they get a big payout. So they're playing the lottery with something that gives them a small edge, but they keep pushing it harder and harder and harder because they know eventually they might get a big payout. I want to see people in my fold that consistently go in and they take measured approaches that allows them to get these wins that isn't over the top. If you take, let me say it this way. Here's a wonderful way of saying it. If you take your 5 highest payouts or your 5 highest winning trades, take them out of the past month's trading, what's your numbers look like? If you can't pay the bills, if you're not getting grocery money at least out of that, then your your model is usually leaning towards lottery like trading. There should be consistency there. It doesn't mean you have to be profitable every single day, but it means that your wins versus your losses should be measured. It doesn't mean if you have losses a couple times a week or a couple times a month or a net loss week that that's a bad thing. You're going to encounter that. There's no way around it. If you're going to stay in this business and you're striving to be consistently profitable and you want to operate in a professional manner where you're treating it like a business, restaurants sometimes have a whole bunch of people come in, dine and dash. They lost money that night. They come in, they start fights, and tear the place up. They didn't foresee that coming, but they took a loss. Are they going to close up the business? Say that's it. We're never operating it again because this is what happened that one time. No, and that's how you have to conduct yourself. Sure, you're going to take a loss, and you should expect that you're going to have losses. But you don't go in fearing that you're going to have a loss, and it overcomes you such a degree that you talk yourself out of following your model, and you're so worrisome about what is this going to do to me if I take a loss. The sheer fact that you're even entertaining that question tells you you're not ready to be trading with real money. You haven't learned your model. You haven't conditioned yourself to trade in the state of indifference. Indifference is, I don't care what the outcome is going to be. The model says this, my experience says this, and everything that's happening in price action is supporting the idea, so therefore I'm going to go forward with it. It's just a transaction. I don't need the money at the end of this trade. That right there is success in a complete sentence. All things I just said, that's the mode of which consistently profitable trading is acquired, and you stay in that lane. If you're worried about the outcome of money, if you want the big payout, you're going to look into the market and see things that you want to see. You're going to project these things in price action. You're going to project it because you want to convince yourself, stay with this. It's going to be a big payout. It's going to be a big payout. And when you share it online, everybody's going to say this is the greatest thing in the world, and you're the BSD for today. And when you don't care about having the big payout, you're just trading the model with reasonable leverage where it's not going to cause you any kind of anxiety. And these types of trades yield at least what you earn in a year in your income on a week by week basis, or slightly more. And you graduate over time by applying these things and these perspectives while you're doing what it is you're doing to be better at trading, to stick to your model, to stick to your procedures and protocols, managing risk impeccably, not fearing missing moves, reminding yourself every day, what did I do good today? What did I learn today? What was exciting? What was I pleasantly surprised about today? Contrast that with what you're going to do later on today, or what you would have done and what you've been doing every Friday. Man, I really screwed up. I should have never traded that day. I should have never went back in. I took a small loss. I could have stopped right there, but no, I had to go do something stupid and go and trade to mine. I blew the account. That's exactly what you do. And that's toxic. So every day, even if you have a bad day, you got to go back and think, what was I surprised by today? What was I pleasantly surprised with my ability to stop, not do something painful, stay in the rules, something I expected to see happen in price, and it happened. Even if it's simply looking at a fair value gap. And now, because I'm teaching you the high probability levels and how to determine what that is, and it happened just like you learned it would act like. That's encouragement. And if you constantly, every single day of your life, you should always do that. Not just in trading, everything. Before you lay your head down tonight, and every day you lay your head down, tell yourself, what did I learn today? What was a positive moment in my day? What was a pleasant surprise? And it made me smile. And I'm able to smile about it right now because I didn't expect it to happen. And I'm thankful that it did. What did I encourage someone else with? What was I encouraged by someone else that I know or love? And what am I going to try to do tomorrow to make things better than I am right now? You can't think toxic if you do those things. If you live your life like that, you're programming yourself to think on a wavelength that it does not permit toxicity in. You're a higher vibration. You're staying outside of that cortisol inducing mindset. And you wonder why you don't feel good. You don't feel like you're focused because you're given all this time and energy to toxic things and people. And if you're around that type of stuff, it's going to cause you to think like that. And if you're thinking toxic, well, you're going to be toxic. And if you look for the positive in everything, you speak the positive with your mouth, you only let it in your mind and your ear when it's positive, and you cancel out and prevent anyone having toxicity, you're giving yourself every advantage that you possibly can to grow